Welcome to Dental Business RX. Practice success in 30 minutes or less.
Thank you for calling ABC Dental.
The profit formula for a dental practice, or any business for that matter, is painfully simple. Income or revenue less expenses equals profit. If I make $100,000, my expenses are $80,000, I have a $20,000 profit. So if I'm trying to increase my profitability, the amount of profit I'm making, which most people are, I would do probably both of those. I'd work on both those areas simultaneously. I would work on increasing my income while at the same time either cutting my expenses or at least controlling my expenses so that they don't, jump up at the same amount my income is. Otherwise, I have no profit. And I've talked a lot about how to increase income, from marketing, case acceptance, dropping plans, etc. And I've spent a little bit of time on overhead in the podcast. It's a bit of a dry subject, but it is half the equation here. And when it comes to controlling your expenses, it doesn't just end with doing a budget or an overhead sheet. Some people think that it does. It's like I built the house, so the house is there. But even if you build a house, you have to maintain the house. So if you want to control your expenses, there's actually something that you're supposed to do on a regular basis. Now, I know that some people don't enjoy doing this. They have trouble with it. I was just talking to a business owner the other day. I'm not the bean guy. I'm not the guy who counts the beans. And I was the same guy back in the day. The days are getting further and further behind me. But, I came from sales, from in the business world. I was in sales. So that was, I made the money. I was the guy who sold the stuff or delivered the stuff. I was not the person who managed the expenses. The problem is when you move into an executive position or business ownership position, if you have no knowledge of that area or you hate dealing with that area, well, then it can get you in trouble. And it's just not a good idea. If you own a business, you have to know how to manage your expenses. Or probably the better word is control your expenses. And I'm using control as a verb. It's something that you do. You follow a basic series of steps on a regular basis to control what you're spending, because that is the key to unlocking the second side of the profit formula. And that's what I want to talk about in this week's episode. My name is Jeff Blumberg, and I'm your host, and I'll start with my usual disclaimer. I sound like a drug company at this point, probably. But I am not an accountant. I'm not a tax attorney, and laws vary depending on where you're listening to this podcast from, where you are when you listen to this. So it's best to have those types of folks on your team, or that you can rely upon a good CPA or accountant, a good tax advisor when you need it. And obviously, I depend upon you to use the appropriate advisor when you're implementing things in your practice. All right, so if I want to control my overhead and expenses so that I can, unlock the second side of this profit equation, where would I start? Well, where I'd start is something I've talked about on the podcast before, is I have to know what my overhead actually is. Now, we have a very thorough overhead sheet. It's painfully thorough. And this is why, look, I understand why people don't like dealing with this area. It's a lot of busy work, but it's something that you have to do. I have that overhead sheet for download. It's a spreadsheet. There's a link to it on the episode webpage. It should not be difficult to figure out your overhead. Again, this is something that you have to be able to confront. If you have difficulty doing it, this is something that we address very early on with clients on the MGE Power Program. As a matter of fact, the first executive training seminar that many Power clients will do is the financial seminar, where we go over this stuff. I also have a course that we dropped on DDS Success not that long ago. It's actually a series of 4 courses on financial management. The first 2 are up as I record this. The other 2 should be coming soon. They're in editing right now. But the first one actually is called How to Accurately Determine Your Overhead. So if this is an area you have trouble with, you can go to DDS Success, click it on. If you're an MGE client, you'd also come to the seminar on finance, and I walk you through the whole thing. So it really isn't that difficult to figure it out and actually come up with an accurate overhead. So once you've got your overhead, right, now you want to take a look at how do you measure up? Do you have any areas where you're spending too much or too little? Now, again, this depends on where you practice, and obviously the overhead sheet is primarily geared towards GPs. If you're a specialist, I can give you individual assistance on that if you'd like. You can email me at jeffb@mgeonline.com. I'll put a link on the episode webpage. But to see how you measure up if you're a GP, we also have an overhead percentage by category. That sounds really a mouthful as I say it. In other words, what should your percentage be for lab, for supply, etc.? And it's percentage of revenues. So if you're collecting $100,000 and your rent shouldn't exceed 4%, that means you shouldn't be spending more than 4% on rent. You get the idea, okay? So you can do your overhead sheet, and then you look at how do you measure up? Are there any areas that are completely out of whack? And something to always keep in mind if you are a newer doctor, meaning you just bought your practice or you bought not that long ago, you're going to have a lot more debt than a more established doctor. So just keep that in mind. Don't worry about it because debt is a variable. You'll eventually get out of that debt. All right. So now, assuming I have my overhead sheet, and I've got both those forms, the overhead sheet and the overhead percentage by category for you for download. I don't know why I'm having trouble saying that this week. Once you have this, you got your overhead sheet, how often should you revisit or review this overhead sheet? Well, it depends. If expenses are staying more or less static, you're not adding a new big piece of equipment or a loan or a lease or a new employee, but they're staying more or less static, you would at least review it once per quarter, okay? If you're adding major expenses, you would review your overhead at that moment. Hopefully you review it before you added the major expense because, if you add the major expense and you don't know if you can afford it, that's a problem. Or if you're in an inflationary environment, which that's been up and down, especially compounded over the last 4+ years, it's at 23+%, and that's the official government numbers, which we know are usually not to be too conspiratorial, but they're favorable to the government. There's tons of examples of this on various social media things where you'll see somebody went to a Walmart and spent $100 and then 3 years later or 4 years later spends $300. I think it's a little higher than 23% just based on things I began observing in 2020. But either way, we got at least 23%. So you're in an inflationary environment. You're probably going to want to review your overhead a little bit more frequently than once a quarter, especially if it's affecting specific areas where you spend a lot of money. For example, let's say you're sending out postcards or a lot of mail from your practice. Well, postage has gone up from, I think it was 46 or 48 cents. Don't quote me on this. I'm sure I'm going to get a comment. You were wrong about the postage. It was in the 40s. Okay, we'll leave it there. Prior to 2020. And now, if I'm not mistaken, it's over 70 cents. So that's a huge change. If you were sending out 10,000 letters a month, or let's say even 1,000 letters a month, that's a $400 a month change, which can impact your bottom line. So those are the three benchmarks I would use as to when I'm going to review my overhead. If nothing's really changing, once a quarter. If it's an inflationary environment or I'm adding expenses, I would do it at that time or at least once per month. But now, beyond this, because this is usually, if I were to kind of rank how this goes, usually most doctors or most business owners, for that matter, will have difficulty confronting and establishing their overhead because they don't want to do it or they don't like it. But let's say you've gotten through that and you have to. You absolutely have to. Your work is not yet done, okay? Because now you actually have to manage your finances. So what financial management steps would I take to ensure that I'm actually living within my overhead? And one last thing I should mention here as well for the overhead sheet. Sorry, I'm going backwards for a second. Make sure if you're doing a monthly overhead sheet that you also include quarterly and yearly bills on there, or semi-annual bills that you pay once every 6 months. You might have, malpractice might be quarterly or semi-annual or yearly. You might have certain taxes that are due, like property type tax that are due once a year. Make sure that's incorporated into your monthly overhead. So if I have a $12,000 a year tax bill, I would represent $1,000 a month on my monthly overhead because then I have the money for the tax bill when the bill comes due. I'm not scrambling to find that $12,000 or drawing my account down too low. So last thing on the overhead there, make sure that all of your expenses are included on the overhead sheet. All right. So now, what am I supposed to do assuming I have a good overhead sheet? And how am I supposed to make sure I'm living within my overhead? Well, for that, I'm going to need two things. One, I'm going to need a regular profit and loss statement. And two, I'm going to need to be aware of these quarterly, semi-annual, and annual expenses. And I'll tell you why in a second. But the first thing I need is my P&L. And I know when I say P&L, because I do a lot of lecturing, okay, and I'll do the finance seminar. I'm one of the main speakers. And I'll say P&L or profit and loss, and I'll see at least a third of the room's eyes kind of glaze over. It's just something they don't want to deal with, right? It's really not that difficult to look at. When you look at a P&L, it's very simple. It basically tells you what your gross revenues were, so what you collected, less any, if there's refunds represented on there, it might show that as a subtraction from collections. You might have something called cost of goods or cost of services, where depending on how your accountant has things set up, that might be where your lab or supplies go. Again, doesn't matter. It's an expense. And then all the expenses are listed by various categories, medical, dental supplies, lab fees, etc., rent. And then at the bottom, you have a number. So if my top number, my what I made was $100,000, and my bottom number after all the expenses is $20,000, that'll be listed as my net profit. That's all a profit and loss shows. I think what throws people off is when you have things like depreciation. Some people understand what that is. Some people don't, right? And again, it depends on how you're set up and, various things. And again, this is an accountant question, but most likely if you buy equipment, that equipment is going to be major purchase depreciated over a period of time, right? It might be 1 year, it might be longer, right? Other things might be depreciated longer. Like if you bought a practice, the equipment you would depreciate differently than the rest of the goodwill you bought from the practice. And again, all depreciation is it's tax write-off. So if I spent $100,000 on equipment last year and I'm depreciating it over the course of 2 years, all that means is this year I'm counting 50,000, or last year I counted 50 and this year I'm counting 50 as a tax deduction. So it'll show up as an expense on my P&L, but it's not actually money I spent this year. I spent it last year. I'm just taking the tax write-off this year. So don't get too wrapped up around that, because depreciation isn't something that you're actually spending necessarily at that time. Okay, it's just a way of calculating it from a tax perspective, but it does affect your P&L, so it's something to know. But anyway, I don't want to make this too much about that, but you get my point. Your P&L, for the most part, on a month-to-month basis, because most likely your accountant is listing depreciation once a year, should represent what you took in, what you spent, and what was left over. Okay, and I want to be aware, like I said, of those monthly, semi-annual, other expenses, because that will affect my P&L. Let me give you an example. Let's say I'm collecting $150,000 a month and I'm spending $100,000. So my net is $50,000 normally. And this is it's like a snapshot of a month, okay? And then that month, 1 month comes up where my tax bill's due, that $12,000 tax bill. Well, I collected my $150,000. I spent my $100,000 plus $12,000 for the tax bill. So my net, instead of saying $50,000, now says $38,000. So I think, oh my gosh, my profit's down for this month. No, it's just based on what I spent this month. It's pretty static because you've been accumulating that $10,000 or that $12,000 in an account for the whole year in order to pay it. You get what I'm talking about? So it's just important to be aware of those things. Otherwise, it can throw you for a bit of a loop and you're chasing your tail when you don't really need to be. But what am I doing with this P&L? Well, I've got my overhead sheet, so I have an idea of how much I should be spending on lab supplies, salaries, all these various categories in my practice, loans, etc. I got that there. And then I got my P&L. And in some cases, some of what you're paying on loans may not be reflected on your P&L. Keep that in mind. This is something you want to talk to your accountant about, just as an aside. So I got my P&L and I got my overhead sheet. Well, the P&L, ideally, I would have my P&L set up on the same categories as my overhead sheet, because then if it has a category of subscriptions, like software subscriptions, because everything these days, the more or less, a lot of business models have moved to a recurrent revenue model, right? You might have an HR service that you use and you pay them a monthly fee. Well, that's a recurrent revenue model. It makes life easy. That seems to be where the world is going. And there's a whole category of software, which you've probably heard before, software as a service, or SaaS. Most software has moved in that direction. Like, for instance, Microsoft Office, you used to buy the box. I'm dating myself here. And you got the CD or floppy disks, if you go that far back. And you'd install it in your computer. It was your Microsoft Word. Well, now instead, you just subscribe to the entirety of Microsoft Office for $99 a year. But then if you don't pay the subscription, you no longer have Microsoft Office, right? So if I have a category on my P&L that has, subscriptions, then I would want to make sure that is reflected in my overhead. Like, my overhead sheet and my P&L categories match. Otherwise, if I'm looking at a category on my overhead sheet and it doesn't match how my accountant's doing my P&L or how I'm doing my P&L, then it's going to be completely out of whack. So if I categorize something as a subscription in my finance software, I want to make sure it's categorized that way on my overhead sheet, just so it agrees. All right? So now I've got my overhead sheet, I got my P&L. Now, this is the big deal right here. This is where this normally breaks down. When are you getting your P&L, and can you pull up a P&L in real time? So let's talk about this for a second. Let's go way back. Because again, I've been in the industry since the first Clinton administration, not long after I began my career. I came from the business world. But generally speaking, how it would work for professionals, lawyers, doctors, accountants, well, not accountants, but lawyers, doctors, etc., is the doctor would send their checkbook over to the accountant at the end of the month, and the accountant would go through it. And then about by the 15th or the 16th of the following month, so, at the end of June, you sent all your stuff to the accountant because it was all analog back then. We didn't have all this digital stuff. And then on the 15th or the 16th of the following month, you would get a profit and loss statement in the mail. And you would also get some type of report from your accountant because the accountant was also reconciling your checkbook to tell you how to adjust your checkbook. Add $60, subtract $600, whatever from your current balance. All right. I'm not saying that didn't work. I wouldn't do it that way. There are still folks who do it that way. I like to have a little bit more of an active management role. And especially now that the technology exists to do it actively, I would recommend that you do it. So in order to make this work, to have your P&L in real time, you'd have to have finance software where your information is being entered in real time, meaning something like QuickBooks or FreshBooks or Sage or Zoho. There's a zillion products out there. One of the more widely used ones is QuickBooks, and you use the cloud version of the software. It even has a login for your accountant, okay? So let's say I've got my QuickBooks, and either I'm entering it, all the data, which you may not have time for, or I hire a bookkeeper who has a login, or they come into my practice once a week and they enter it. You could either find a bookkeeper, or your accountant may even have a bookkeeper on staff that you can pay to use in order to keep this up to date. If I'm having my books kept up to date on a regular basis, then I can pull a P&L with little to no delay. Because ideally, if at the end of June, I want to see how we did in June and I want to perform oversight by like maybe the 3rd, 4th, or 5th of July, probably not on the 4th, right? I'll be out hanging. If you're in the U.S., it's a big national holiday. But let's say on the 5th of July or after the weekend, I'm going to sit down and I'm going to have my P&L and I'm going to have my overhead sheet for June. I have my overhead sheet in general and I have my P&L for June. And now I'm going to start comparing. This is the oversight step, okay? So now how am I going to do that? I'm going to look at basically, here's what's categorized as lab expenses, and I'm going to look at what I've allocated on my overhead sheet for lab expenses. And I know that's a variable expense, but you should have a general range that you're in at whatever level of productivity that you're at. So if I'm producing 150, I would expect my lab to live in a certain zone. If my production were to go up to 200, then of course I would expect my lab fee to go up. Same thing with supplies. But let's say I'm producing not static, but relatively in the same area, and I've got $9,000 a month allocated for lab. I'm going to look at my P&L now and look at how much did I spend for lab. In other words, I'm going to basically compare my overhead and my P&L to see, are they matching up? Are any categories completely out of whack? Are any way under or noticeably over? Maybe I look at marketing. I allocate $5,000 a month on my overhead for marketing, and I look at my P&L, and my marketing bill for June was $2,000. Well, that's a problem. You might go, well, why is that a problem, Jeff? I'm spending less money. Well, what if a marketing campaign that I wanted to get done didn't get done? Or the company that's managing my Google ads just didn't do any? That's a problem. So what I'm looking for when I'm tracking my P&L against my overhead sheet are categories that are way under or noticeably over where they should be. And I'm probably going to prioritize them based on the biggest disparities. So if I have, let's say I'm supposed to spend $6,000 or $7,000 a month on supplies, and my supply bill was $16,000. And that's the biggest disparity. That's the one I'm jumping on first. I want to find out what happened. Get me the bills. Let me look into this. The nice thing about this is I'm potentially catching what might become a financial hemorrhage because they sometimes start out small before my patient bleeds out here, okay? So I'm finding it the first month, not before money has been wasted month in and month out, okay? And I'm putting a stop to it before things go completely out of control. So that's the first thing I'm going to do. I'm going to compare my P&L up against my overhead. What am I going to do next? I'm going to take a look at any credit card statements for the practice. Now, you might ask, well, why am I doing this? Because technically, the credit card activity should show up on my P&L. That's true. But with the P&L versus the overhead, I'm just looking at broad categories. And unless there's a problem, I'm not digging in. There could be things hiding on your credit card statement that you don't want to spend. It's easy for things to get buried in there. Okay. So I want to comb through my statement and make sure I'm not spending anything that I'm not supposed to be spending. Okay. Just as a regular thing. 'Cause it's very easy to add an expense there. And then, you find out 9 months later when you happen to look at your credit card statement, if you're looking at it every month, you should catch this on a regular basis. And how long should this stuff take you? If you're doing it once a month, maybe an hour, maybe less. If there's not much going on and everything's tracking, it should be pretty quick. But if you find major categories that are completely out of whack, like let's say all of a sudden you see your staff payroll is 1.5 times what it normally is, and people are working overtime that you never wanted them to work. Well, you got to pay them. You already paid them, but you can at least make sure you're not doing it this month. You see? You're not incurring that overtime. You're not having work overtime. You get the idea. You're performing oversight. You're looking at your credit cards, etc. So let's say I've done all that. I've caught the areas that are out of whack. I've handled those and make sure I don't have any ridiculous expenses on my credit card. What am I going to do next? Well, there's that bottom number on the P&L, right? There's that profit number. Well, I'm going to make sure, if that profit is actual cash in my accounts, because as I mentioned, and I don't want to get into a huge tax thing on this, but in certain cases, part of what you pay on loans may be considered a profit. Okay. The interest isn't, but this is again an accountant question, but I'm going to look at that profit number because that's my profit. So whether I take that money or not, because that's my profit, I'm going to eventually owe taxes on that. So I'm going to make sure, number one, and again, this is something you could discuss with your accountant, I set those taxes aside. So let's say the bottom number on my P&L says $30,000. Well, then I'm going to make sure, I'm going to ask my accountant how much will I owe on that, and the accountant may say, well, you're going to owe about 10 grand. I go, okay, good. I'm going to take that 10 grand, I'm going to put it in my tax account so that I don't spend that money, because I want to make sure if I'm paying quarterly taxes, for example, I actually have that money when the taxes come due. Also, if I want to make a profit disbursement, I can see if I actually have profit to disperse at that point, okay? So I've covered myself from a tax basis. I've given myself profit if there's profit in the practice. And even if I'm giving myself profit, I still got to set those taxes aside. Again, this is a discussion you have with your accountant. But this way I can make sure I'm staying on top of what's going on in real time as it's happening, okay? Now, of course, there's more you can do, but 90% of people don't do what I just described. And just doing that will give you a degree of control that at least makes you feel like you're somewhat more the captain of your own destiny at this to some degree over your profitability than feeling completely clueless about what's going on in your practice. The other area I would perform some oversight on, because again, we've talked about the expense side of the equation. What about the income side? Well, sure, you want to boost income, but in the process of income, you might be losing money. Let me explain. So let's say, for example, and this is worst case scenario, you're being embezzled from. Well, how are you going to catch embezzlement? Here's what I will tell you just from my experience. 99.99% of the cases of embezzlement I have seen in my career would have been caught if someone was just looking at day sheets. They would have seen it. They would have seen like, oh, wait a minute, Mr. Jones paid us $6,000. Why is only $5,500 showing up here in a $500 courtesy discount? What's going on here? So your day sheet should be reviewed, preferably by your OM. You might review them once a week if you feel like it, or you could review them too, just to make sure that what you're collecting and your day sheet actually matches up eventually to what you're actually putting in the bank. Okay, that's something that I would do. If you have a larger practice, maybe you have treatment coordinators that operate autonomously or independently, and you have an office manager who's running the whole place. I would be reviewing treatment plan sales. And this is not an indictment of treatment coordinators or anybody else, but specifically you might have, let's say I'm having a tough day as treatment coordinator and I'm sitting in front of a patient, it's a $19,000 case, and I go, hey, if you pay me now, I'll give you an extra $4,000 off. Well, I walk out of the room looking like a hero. I just collected 15 grand, but I just shorted the practice by $4 grand. Okay? That happens. So I essentially just lost $4,000 in the practice, and also that treatment coordinator needs to be corrected. So these are things that I want to find. Same thing with embezzlement, because in the process of making income, I'm actually losing income in that case. Which leads me to the next one, which is a talk for another day, which is you might want to, just for your own edification, look at how much you're writing off your full fees by being in network. And that is usually a bit of a shocker. And it's funny, way back when managed care started to get a foothold or a toehold or whatever kind of hold you want to call it in the dental industry, you didn't really have the in-network fee schedule entered into your software. That wasn't very common. And software, compared to what we have now, was a lot more, it wasn't as good, right? It wasn't as workable. So you usually had your full fee schedule, and you happened to be in network with whatever plan it was. And the full fee was, I'm going way back, $500 for a crown. It was a lot of money back then, back in the early 90s. You're charging $500 for a crown, but it's this insurance company only allows $400, and you're in network with them. Well, the way this would look normally when you filed insurance is you'd put your full fee on there, and then you'd get your EOB back, and it would say only $400 is allowable, and they were paying $200 or maybe less due to a deductible. So then whoever handled posting payments would have to write off that $100. Because it was $400 they allowed, it was $500 you charge. So then you'd start to see an accumulation if you were in network of write-offs. And it was, I actually, believe it or not, preferred that because it showed you in real time how much you were actually giving away. And I remember talking to clients back then, newer clients, I'd sit down with them and they were in network and you'd see they're producing 150 and they're collecting 100. And if you were to go before that in time, before PPOs, the sort of the benchmark in dentistry is when it was just regular insurance, 97% collections was considered the benchmark. So if I produced, $100,000, I was supposed to collect $97,000. That was just the way it was because insurance was going to pay what it paid, but I was supposed to collect $97,000 because I wasn't writing any fees off. Okay. So with the advent of, if during that period I had seen somebody who's producing 150 and collecting 110, that would be a huge red flag. That would mean insurance not getting filed, or they're not collecting money from patients, or something's weird is going on. They're not asking for copays. Something's off. Well, with the advent of PPOs, all of a sudden that 150 to 110 just was write-offs. But then the doc had it thrown in their face continuously. I mean that in a good way, because then the doc could look and go, "My gosh, I'm giving away $40,000 a month in treatment," which is not good. That's why ideally you need to get out. I would definitely advise that you get out. Be smart about it. All right. So these are some of the basics you can do. I'd perform oversight not just on your expenses, but I'd also perform on your income as you're doing it. Because if you really know and control what you're spending and you continue to invest well in, good staff members and good marketing, and you train the team that you have, that's my shameless plug, hint, hint, for MGE, your income should go up. And if you're controlling your expenses, you should become more profitable. And that's about the size of it. So that's about all I have for you this week. Don't forget, I have the links to the that I mentioned in this episode to the overhead sheet, the both overhead forms, the overhead sheet, as well as the percentage by categories. I also have a link to DDS Success and the MGE Power Programs. You can find out more there. And I know, look, this isn't the most exciting subject, but unfortunately, understanding and applying all of this is the gauntlet you have to run to achieve serious profitability, which is, I would say most of us want. Sort of like having to watch a bad movie to get something that you've always wanted, right? Anyway, I hope this helps. If you have any questions about this, I'll put my email address as a link on the episode webpage. Again, it's jeffb at mgeonline.com. You can also find us online at mgeonline.com or call us at 800-640-1140. Folks, have a great week, and we'll see you at the next episode.